Our first speaker is somebody we know extremely well at the Canadian Council on Africa. Mr. Zemedeneh Negatu is a friend of the organization. He's been to many of our conferences. Him and I share something. We're both former E&Y, where we started our careers. Actually, you started your careers, I think, at Price Waterhouse, and I started at E&Y, but we're from the same school. He's widely known in Africa and received many honorary distinction as business leader. He was named as top 10 most influential African in 2010 and received many other distinctions. He's from Ethiopia, but also lived in America, in Canada, and Brazil, Argentina, Saudi Arabia. He is currently the global chairman of the American investment firm Fairfax African Fund based in Washington, D.C. Fairfax is very known to us in Canada, and Fairfax focuses on 5 sectors: manufacturing, infrastructure, natural resources, hospitality, and agro-processing business. Zemedeneh was at Ernst & Young for many years, for 18 years, founded Ernst & Young Ethiopia. He served on the transaction advisory services for East Africa and member of the EY Global Partner Council. So it's an individual we see often on the BBC, CNBC, Bloomberg, FT. So someone that's that we know, that we recognize, and he serves on 10 boards globally, including Investment Africa based in London. So Zemedeneh, without more of an introduction, we know you well. Please, it's your turn.
All right. Good morning, good afternoon, good evening, wherever everybody is. I see a lot of people online. Benoit, thank you. Nola and CCA and everybody else, thank you for having me back. I'm a good friend, as you said, of CCA. Good to be back, especially in times that have changed dramatically since we last saw each other in person. So what I thought today I'll do is, and as the heading of this webinar is post-COVID that we need to talk about in Africa. So I've prepared a few slides, more talking points, but it's a macro picture because they have other speakers who do a deep dive, drill down on specific sectors and other things. I wanted to give you my take and what I see across Africa, obviously around the world, here in Washington, where I am, what we think about Africa, why invest in Africa. Essentially, that's the argument, why Canada should invest in Africa, why Africa should do business with Canada. That's the theme of my presentation. So what I wanted to do is essentially present a realistically optimistic view of doing business in Africa. Okay. Now, as you can see from the first slide here, the title of the presentation is Post-COVID-19 Africa, Economic Realities and Opportunities Between Canada and Africa. I don't have very many slides, but in the interest of time, what I will do is just go through it fairly quickly so that maybe we'll have a point of discussion as we go along. So let me just see if the slides can work. Let me just give me a second. Yeah, that's it. So as the minister said in her opening remarks, Prime Minister Trudeau was in Africa, and particularly in Ethiopia. I had the honor of meeting him at a business luncheon. And it was encouraging to see the Prime Minister of Canada in Africa. It shows the seriousness, the willingness of Canada to engage Africa. He was in Ethiopia and also, as I said, in Senegal. So just wanted to put that out there because this is a continuation of the visit by him and the minister and others in his delegation to show commitment for Africa. Now, so why would you want to invest in Africa? Why would you do business with Africa? Canada is a rich country. Has a lot of other opportunities. And I'm going to try to make a case for why. Now, as I said, we need to see beyond COVID, the here and now. It's important that we don't get swamped between the challenges that we face. As real as it is, as devastating as it is, unemployments are high everywhere, economies have been shut down, and including in Africa. I think we should see what would Africa, what would Canada, what would the rest of the world look like maybe 6 months from now, a year from now, 18 months from now. it's important to put that in perspective in order to talk about investments, okay? So the main reason really is the economy. What does that mean? So for those of you who are able to see the slides, what I've done is look at the ranking or the aggregation of the bigger economies in Africa. And there's another year. What we need to look at is this actual concentration of economy amongst the top 5, and then beyond that, the top 10 African economies. So when we look at the biggest one, which is Nigeria, it accounts for a quarter of Africa's economy, followed by South Africa, which is about 21% of the total. And then you have Kenya, Angola, and Ethiopia. These are the sort of the top 5. They account for about, this is sub-Saharan Africa. In fact, by the way, I wanted to emphasize throughout my presentation, much of my talk is about sub-Saharan Africa, because there are a lot of commonalities, there are a lot of things that sub-Saharan Africa has compared to, say, Northern Africa, which has some different dynamics. So the presentation here is about sub-Saharan Africa. And then when you take these 5, they account for about 62, 63% of the GDP of sub-Saharan Africa. And then when you add the next 5, they together account for almost 80% of the continent's GDP, to be precise, 77%. Now, when we look at Africa, sometimes there's the notion that Africa is too small. Maybe, I mean, I looked at the Canadian-Africa trade figure, and to be honest, it's less than 1% of Canada's exports goes to Africa. Now, somebody in Canada might say, well, you know, why bother if it's less than 1%? Well, here's the figure. Sub-Saharan Africa's total GDP is 1.7 trillion, which is about the same size as Canada's GDP. And then when you include North Africa, it's closer to 2.5 trillion. I don't think anybody should say 2.5 trillion is small. It needs to grow, and it will grow. But when we look at where we came from as Africa, so if you go back to 2000, it was only about 570 billion. Today, it's 3.5 times. So at that kind of exponential growth, I think you will see the opportunities in Africa in numbers. So the reason I showed the bigger economies is because, like we saw in Asia, if you have larger economies, especially on the coastal areas in the east, the west, and the south, they, like just like China did and the other Asian and Japan did, they can pull up the rest of the continent, the countries around it, and create critical mass. So it's important to have sizable economies in Africa. Now, that's where we are today. But I think as investors, both in Africa and in Canada, you are forward looking. And as I said, if you go back to Africa's history in the 70s, 80s, we call it the lost decades. Even the 1990s were not much better. But when you look at these graphs, you'll see starting in the 2000s, you see a lot of greens. So this is, by the way, data we got from the IMF. And you can see starting in the 2000s, a lot of African countries had started to do well. The peak, I would say, was in the 2010 era. The following 4 or 5 years, almost all of the continent was growing rapidly. And then things started sliding, especially the collapse of commodity prices. But I think 2019. Now, if you look at the bottom side of the graphs, today, the whole world is in red, except you would see 4 or 5 countries in Africa, including my birth country, Ethiopia, that are expected to grow. But everybody else is sliding as to be expected. What I wanted you to look at the right graph, where almost all of Africa, starting in 2021, we'll be back on track in the growth trajectory. As Benoit said earlier, we expect a lot of capital inflows to come back to Africa. A lot of activities from the IMF, the World Bank, and others, the G20s, a lot of the activities that attach the initiative that they could taken, and the reforms that Africa is doing will start showing to realize the benefits. And I want to add something here. Why would Africa grow? Obviously, it's a very rich continent, and I'll show that in a couple of slides, but a lot of reforms have taken both on the political front. Today, every African country goes through a democratic process, unlike the 70s and 80s. A lot of business reform processes have taken place. So you're going to start seeing a lot of good results, positive results throughout Africa. Some countries are outliers, they'll grow by 8 and 9%. Ethiopia, one of them, maybe Rwanda and a few other places, but all will start showing results. So that's what we need to keep in mind. If we continue on this path, as I said, this is a forward-looking, realistically positive presentation. There are forecasts that show that by 2050, the total GDP of Africa will be around $29 trillion. That's a very large number. How big is it? Well, it's equal to the US economy today, plus Japan and Germany combined. I mean, that is a powerful number we need to keep in mind. $29 trillion. That also can be translated into purchasing power. We have some data that shows even closer for the purchasing powers of consumer and businesses to be close to $7 trillion. And this is source that we got from. So these are just some macro pictures I want to share with you before I give you some specifics and go through the details. I want to keep in mind something though. All this is predicated on what I call globalization 2.0. As was said in the beginning, in the openings, a lot of nationalism taking place here in the United States. America first is the guiding principle, and many European countries are now looking into that. That means globalization as we knew it in the last 20, 30 years will have a different phase. However, it will still be beneficial, in my view, to Africa. The way the globalization 2.0 will head will benefit Africa tremendously. Reshoring, maybe not necessarily to the Canada or the United States or the European, but reshoring it to African countries, I think is a possibility. And it's actually a real possibility that Africa can take over. The other opportunity for Africa is, and then for Canadian investors and others, why would they do invest in Africa? Is because there's an unmistakable gradual shift of economic power from west to east. Gradual, but unmistakable. So the growth will be in Asia. That means Africa is beautifully positioned to take advantage of that. So this is sort of the outlook for Africa. Now, as Benoit said earlier, I was at EY for many years, and we used to put together this thing called the Africa Attractiveness Survey, and I was part of the team that contributed some of the data. I've always liked that a couple of the graphs we used to put together, and I wanted to show you, because this is a global conference, and especially for the Canadians, who's investing in Africa from an FDI perspective. At the end of the day, that gives you an indication of how much confidence there is in Africa. There's a rearranging of the deck, and it's important to keep that in mind. And the largest investor by capital cumulatively from 2014 to 2018, the last data we have, is Canada, about $72 billion. And next is the United States, but about half of what China has invested. You have France, UK, UA, and so on. What you don't see here, it may not come as a surprise to Canadians, is Canada is not in the top 10. I'm sure it could be changed, but at the moment, Canada is not in the top 10. But what I always looked at is how much contribution did FDI make to Africa in terms of job creation? That's also important because in Africa, we have a lot of young people, and I'll show you in a second. So again, China was the largest generator of jobs in Africa cumulatively from 2004 to 2018, followed by the US, France, UK, and the UAE. Again, it's important. The one place where there's a slight rearranging of the ranking is when we look at FDI by number of projects. The French are number one, the US is number two. China is actually number four, but overall, China is now the largest. So when we talk about who are the major investors in Africa, I think we need to discuss the big elephant in the room, which is China. Again, for Canada, that needs to be factored in because of the G7 countries, 4 are in the top 10. Is not one of them. Canada resources, the ability, the talent to rearrange. There's the number one, and this is for last year, the largest number by projects, by sector was TMT, which is technology, media, and followed by consumer products, which is the CPR. So, however, as has been indicated in other places as well, by value, by dollar value, the extractive sector is still the main attraction in Africa. But that has to change because it's still extractive, as the word describes. It's not value addition or beneficiation. So that was just a quick snapshot. Now, in the business that we're in, the private equity, I thought I would show you if you'd like to, because it has making significant contribution in Africa, or although relatively from a low base and compared to the global. But in between 2014 and 2019, private equity has invested over $25 billion in Africa in about 1,000 transactions. So again, this is just an indication that even private equity, which is very aggressive, very focused, and looking for returns, is making very significant contribution in Africa. So, and in a snapshot, that's sort of the macro picture of Africa's economy. Having said that, and I want to go through this very quickly, so maybe the other speakers have a chance, and also questions to be asked. What are the growth drivers that we see in Africa, and what should investors, the Canadian investors and others should keep in mind as well? This is what I call the growth. One of the key growth drivers is demographics. I think you all have heard about it. It's a very young continent. The median age is under 20. Not only is it under 20, but it's very young. So today there's about 1.3 billion people in Africa. There are forecasts Africans who could be deployed, creating opportunities for investors. The other growth driver is urbanization. There's mixed bags, so there are different schools of thought about how should we manage urbanization, but there's unmistakable unanimity that urbanization, if managed well, can bring benefit. Again, here, Africa is one of the least urbanized continents in the world, but over the next 15 to 20 years, it's expected to be one of the most urbanized, meaning wealth creation is there. People who produce for an urban class, urbanized countries, companies, investors could do very well. So we have some forecasts that say that by 2030, there'll be 34 African countries with 34 African cities with over 3 million in population. Again, and there are some others that are even more dramatic than that. So urbanization will be another growth driver for Africa. Beyond that, and then when we go drill down into sectors as growth drivers, it goes without saying, infrastructure is probably by far, and this is where I think Canada has a lot of strength, with complementary with what Africa is needed. There are estimates that show that between 130 and 170 billion dollars a year in infrastructure needs out there in Africa. The challenge here is the financing gap, estimated between 68 to 108 billion, which can be filled. By the way, when we discuss today, we need to think differently. We can't just say, well, Canadian companies don't do this and don't do that. Well, you have a lot of big institutional investors in Canada that can funnel their money or through private equity funds. The pension funds can link up with others. So there are creative ways for Canada to partner with Africa in many of these sectors that I'm discussing, especially including infrastructure. Of course, Canada is very good at the energy sector, railway. I mean, Bombardier does fantastic railways and subways and things like that, and the telecom and other sectors. So in summary, infrastructure would be a major attraction for Canadian investors. Now, the next one might come as a surprise to many people. Technology in Africa, the digital revolution or digitization of Africa may not be the first thing that comes to mind for a lot of investors, not just Canadians or Americans or anywhere, but it is actually showing big results. Why is that? Well, I have some data here. Hopefully you can see it. Today, there's almost 450 million African cell phones in Africa, unique subscribers to mobile phones. That's forecast to go to 623 million in 5 years from now. Most of the phones today, less than 40% are smartphones. That's expected to be almost 70% in 5 years. And then the mobile penetration, yes, relatively speaking, it's small today, about 239 million, but it will reach about 500 million in the next, we're talking about next 4 or 5 years here. So these are big numbers. Leveraging that, I think you can see a lot of smart young Africans have started investing and developing talented applications, products that is serving a lot of Africans. So, for example, mobile financial services is actually much more in use in Africa than it is in the US or Canada or the developed world. That's because the unbanked was a key driver for innovation in Africa. So companies like M-Pesa in Kenya are leaders in that area. We see ride-sharing companies, like in my country in Ethiopia, Ethiopia's version of Uber was developed by young people. Again, the availability of mobile technology is allowing Africans, and as I said, mobile financial services, there's this company that Fairfax is an investor in called Hello Cash, which has several million customers. So using your phone as you bank is now. So technology, Africa's digital revolution, should give a lot of people opportunities. E-government is now being rolled out. In fact, if one thing we learned about COVID, what has come out of COVID, is the need to roll out government services and other services online. Even this discussion we're having today is enabled by technology and in Africa. So remember the young, dynamic, talented population I talked about, that could easily be deployed to become innovative. Companies, online marketing firms like Jumia, which had very high valuations. These are the kinds of opportunities that Canadians and Africans can partner on to develop the continent and benefit from the opportunity. So that's another growth driver is, and I won't dwell too much on it because the other speakers, Dr. Kojo Busia, will be talking about this. But I want to just leave you with some numbers on the natural resource space. I think it'll blow away a lot of people's mind to see so much resource is still not fully utilized by Africa. Why? Well, we know, look at about 30% of the world's known reserves of minerals are in Africa. Cobalt, diamonds, platinum, you name it. However, it's still underexploited. And more importantly, this is the thing that I hear about from a lot of African decision makers when we talk to whether government officials or business executives, the beneficiation is done offshore. What could very easily be done in Africa, both the host country and the investors can benefit considerably if it is done. So take this as it is. I honestly believe there's a huge opportunity here for both localizing the processing, and I know Nola has some innovative ideas in this area of creating that benefit in Africa. But I think consider natural resource, of course, without saying that there is huge opportunity. And then a couple of sectors, and I'll wrap up. Agriculture. Listen, maybe Canadians won't go and farm on African farmlands, but there are other areas you can participate in the value addition. But here's the numbers that I think should be kept in mind as we think about the opportunities in Africa. 60% of the world's arable, uncultivated arable land is in Africa. And yet in Africa, we import last year $40 billion of food, which is forecast to reach over 110 billion by 2025 in the next 5 years. That means there's opportunity for value addition. I mean, I have a little picture there of beautiful Ethiopian coffee. There's a cocoa at the bottom that you see. A lot of this stuff can be value added in Africa on the ground and exported to the rest of the world at competitive cost, by the way. Competitive cost, but at quality. So think of agriculture as an area of opportunity as well. And then the tourism sector, it's kind of sad, of course. The sector has been hit real hard around the world. Hotels around the world have 5-10% occupancy. The airline industry is decimated. It seems like every day we open the newspapers, there's one more news of airlines going out of business, filing for bankruptcy, whether it's South African Airways. Yesterday it was Thai Airways here in the United States. A lot of the airlines are struggling, the US government. But we need to think, as I said, the here and now, the 6 months, 12 months, a year from now, and say, is there an opportunity in Africa in the tourism sector? Can Canadian companies, can Africans partner together to develop that sector? And the answer is absolutely yes. And let me just tell you why. Yes, tourism contributes about 8.5% to Africa's GDP, which is about almost $200 billion. That's okay, but considering the opportunity is still low. 67 million international tourist arrivals in Africa. You say, wow, that's a lot. Well, to be honest with you, that's very low. Dubai Airport alone, 90 million people passed through Dubai Airport last year. 90 million. So we're talking about 54 countries, 67. That means the upside is there. Of course, the sector still employs millions of Africans. That's a plus, but more can be employed. However, all this figure amounts to Africa accounting for 5% of the world's international tourism arrivals, just 5%. And Africa today, last year, received only 1% of the 1.7 trillion of the world's tourism earnings. Keep that in mind, 1.7 trillion, and Africa only gets 1%. So that means there's huge opportunity here. If you add it, if you take that to 2% or 3%, imagine over 1.7 trillion. So again, the tourism sector, as decimated as it is across the world and including Africa today, when post-COVID, I think there's going to be a huge revival. And then one other thing, which I know may sound like an oxymoron for a lot of people, to have the same sentence of Africa and manufacturing in one line, but I honestly believe there is real possibility for Africa to be an industrialized continent. We have some examples here, very good examples. When we look at people like Dangote, who's rolled out manufacturing facilities, especially in the infrastructure space, especially in cement production and other things, we know it's doable. In Ethiopia, which has it's really been very focused on rolling out these massive industrial parks, it's attracted a lot of international investors. Again, there's indications it is doable in Africa when you see these kinds of examples. We have a lot of it in Kenya, the same thing, in Tanzania. Across Africa, we have flickerings of that there is opportunity in the manufacturing sector. Yes, it takes a lot. The infrastructure has to be there. the other elements, the logistics, all those things need to come with it, but it is doable. We can export. And as I said at the beginning, and the globalization 2.0, the reshoring, or at least the taking things out of China right now, is a real possibility that is being discussed by the G7 countries, which will be a meeting here in the United States next month, apparently. But it is a real possibility. The Europeans, yes, some critical things will still go back to their own countries, maybe pharmaceuticals and other things, but a lot of the stuff that is now being produced in China, especially that they are for the cost, can be reshored to Africa. And this is where Africa has a golden opportunity, a unique opportunity to capture this moment and bring back. I mean, there's a data that shows 85 million jobs are looking to leave China. And this is pre-COVID, by the way, because the Chinese didn't want to do shoe manufacture or leather manufacture or clothing manufacturing. I think they've become too wealthy. That means Africans, the 1.3 billion I talked about, that will be doubling by 2050, are actually in a position, and this is where I think Canadians and Africans can partner, and other investors can partner to take advantage of the manufacturing opportunity that Africa presents. And then finally, this is my final talk, all this will have, all this production that we do, all the stuff that we do in Africa, it will be accelerated, it will be turbocharged because of some big things that has happened in Africa in this past year, which is the Africa Continental Free Trade Area, which is the world's largest free trade, the world's largest, I repeat that. That means the entire continent would be one free trade area. Now, it was supposed to be launched next month because of COVID, it's been slightly delayed, but a year from now, or a few months from now when it's launched, and that means the whole continent, in a phased approach, but still open to everybody who operates in Africa, will have the continent for itself. Excellent opportunity. In addition to that, if you invest in Africa, if you do business in Africa, in places like Ethiopia or Nigeria or Ghana, wherever you are, you can still export all your stuff to the Europeans under what's called everything but arms duty-free agreements. And here in the United States, you can ship everything from Africa under the AGOA. So these are great opportunities, free trade arrangements that gives competitive advantages to Africa that no one else has. Obviously, other than Canada, Mexico, the US, you have a special arrangement. But beyond that, I think this will be, so you could have up to 30, 40% cost advantages when you arrive in the United States, when you arrive in Europe, just because you have duty-free and quota-free privilege. So in summary, these are all the key areas that I think will make Africa an attractive. And that's why I think certainly at Fairfax, we're very good at doing business, hopefully in Africa, both on the investment banking side, but on the investment, on the actual private equity, and we do venture capital as well. We look at Africa positively. Are there challenges? Yes. Are there opportunities? Plenty. So there are ways to ring fence the risks, but I also want to point out honestly that not every African country is growing. Not every African country is collapsing. There are extremes. There are some that are doing fantastically. There are some that are still in post-crisis, and the vast majority in Africa are doing well, will do well. As I said, the IMF had a forecast before COVID in January, only 3-4 months ago, that the continent would grow by 3.2, 3.4%. Of course, now they're looking at minus 1.6 for this year only. So it'll go back to that level. So if you're looking at a continent with what, 2.6 trillion growing by 4%, you can add up the numbers, but you need to be selective. You got to do your due diligence, stay focused. And a lot of Africans have done a lot of reforms or are in the process of doing reforms. I mean, Rwanda, for example, stands out. It's in the top 50 of the best places in the world to do business. There are others. And again, Ethiopia has introduced massive reforms agenda to move up, to ease, to make it easier. A lot of African countries do that. So the reforms are real. They will take time, but they're real. So investors who are in there for the long run. My final point, Africa is a long-term play. I would not suggest Africa for asset flippers, okay? It would need people who are serious, who are there for the long haul, who want to be part of the community, who want to invest with the community and benefit themselves and the communities and the countries that they're in. If you do that, and we are, I mean, I speak as an investor, as an advisor, I think there are serious opportunities, real meaningful opportunities in the next 5, 10, 15 to 20 years in Africa. So in summary, CCA, Nola, Benoit, thank you for inviting me, and it's a pleasure. If there are any questions, I'll be happy to answer them. Thank you.